Hello, this is Manesh Patel from the EII Capital Group. This is our weekly Ichimoku analysis for the global stock market, where we cover S&P, NASDAQ, Dow, FTSE, Sensex, Hong Kong, and so forth. Today is October 17, 2010. Let's begin. We got a lot to cover. Normal disclaimer, this is for educational purpose only. All charts are either in Thinkorswim, TradeStation, or freestockcharts.com. Okay? Here are my contact details. You can follow us at Ichimoku Trading. Let's begin, and let's go start looking at the U.S. markets first. Let's go look at the ES mini futures, NASDAQ, and the Dow. Okay, so if you look at the ES mini futures, we got to our next resistance level, which we kind of wanted to get to, 1184, which we basically outlined last week. We got to that level, and we kind of stopped right at that level. Okay, that's a key level. Reason why is if you go back to the monthly time frame, let's go look at the monthly time frame. Look at this bar right here. Look at that close. Look at that open on the ES futures. We pretty much closed right there on the monthly level. This was dating back in April and May. So the level we're at right now is a key level, resistance level based on the monthly time frames. Okay, so we'll kind of see what happens here. Chicago is still underpriced, so it's still bearish. However, a couple of more weeks it'll become bullish, but it's going to be interesting to see also because the future cloud now looks like it's turning. If you look at the daily time frame, excuse me, you could see that we had 3 days closed pretty much right at the same level, 1184.26. So we really haven't been able to break that at all. However, everything's still very strong as far as the Ichimoku indicators are concerned. Okay, and you could see we had a lot of days where we started off, we opened, went straight down, then we kind of came back up, which are more signs of a bullish scenario too. Okay, and you kind of remember we got elections coming up November 2nd, so it seems like this market wants to go positive, keep on going up until those elections are there. So just be very careful as you trade. Okay, if you look at NASDAQ, the NASDAQ, let's go to the weekly time frame. You can see that this future cloud is now starting to move up. It's broken its major resistance level here and is very strong to the upside. Okay, the only concern we have is this Tinkinson is not up closer to price, which we don't like at all. So but it is pointing up, so we gotta just go with the flow right now until that Tinkinson flattens out. But we do expect that Tinkinson to be closer to price, otherwise a pullback is going to occur. But this thing has broken up to the top side compared to the S&P. If you've been following our advice of going long NASDAQ stocks and short S&P 500 stocks, you're doing really well right now moving forward. Let's go look at the Dow futures. Dow futures still bullish. It's stronger than the S&P 500. However, it hasn't got to its resistance level here and broken above it. Okay, so NASDAQ is still leading the market going bullish. Dow's next, and then S&P 500 if you look at it. Okay, and if you go down to a daily time frame, you can kind of see where the Dow's at. Very similar to pretty much all the other markets where they kind of close. Very similar to where they open. Let's go look at the monthly time frame for the Dow, and you could see same scenario. We closed last week right at these levels right there, which is pretty interesting. Okay, so we gotta wait and see what happens. But if we do pull down, this is basically a double top on the monthly time frame for all the market indexes for the U.S. market. Okay, so let's go look at some global markets. Let's go look at the Hong Kong. Last week we were talking about rotating out of the Indian market into the Hong Kong. Reason why it seems like the Hong Kong market has potential more to the upside now, since it's just breaking out of its resistance level. You could see this is a weekly time frame. Last week we were here, pretty much broke up a lot higher, so this went and moved really nicely to the top side. Okay, if you look at the daily time frame, you could see it's moving nicely. That gap up we don't like there because we're kind of expecting a pullback now, especially since the Tinkinson's flat. So you kind of maybe take some profits off the table right now if you got in it. Okay, let's go look at the Sensex where we're saying rotate out, and you could see look what happened this week. We did pretty much go lower as we expected because we're kind of very overextended on the Indian market. We expect that, and then we're expecting it to kind of get closer to this Tinkinson value right there of right around 1933.37. It probably won't go all the way down to Tinkinson. Probably just sit there, get to about 20,000 level, and then probably stop and maybe see what happens there. So if you look at a daily time frame, the level that we're expecting it to kind of get close to as possible is 1977 or 8 around there. And then the key question is, what's it going to do? One thing that's pretty not good for the bulls is this Chicago's getting very close to price. Also, if you look at this, this was kind of a head fake to get everyone else back in, and then what they did was yanked them. So he caught all the long sellers, long buyers with their pants down right now, as you could see. So it's going to be interesting to see what happens. We are at a key support level right now, which is right around the 20,130. So it's going to be interesting to see if it holds there, or if it doesn't, it's going to have a huge potential going all the way down to 1977. As we mentioned, Hong Kong was the market to be in, and if you did rotate out, you're doing really well. If you look at the FTSE, just like the U.S. markets, if you look at the daily time frame, it's at a major resistance level right now, and kind of bounced off that, and it's gonna have a hard time trying to get past that level. The more this thing consolidates, more the thinkers and cages are going to come together and flip, which is not good at all for the FTSE market at all. If you go look at the weekly time frame, just like the Dow, it's got very similar characteristics of the Dow than the SP and the NASDAQ. It's getting very close to its resistance level. Well, it's kind of at it, but it hasn't. The closing price is not, but the highs are. The future cloud is turned bullish, and basically the Chicago is right here. So next couple of weeks, this thing will come out. The Chicago will come out, but the question is, what's going to happen by then? Next couple of weeks are really going to tell which way the market's going to go. We're going to start reversing or so forth. It's pretty interesting. Reason why is the November elections is just around the corner. So it's interesting timing that we're seeing all this right around the elections, which kind of makes you question everything that's going on. Here are my contact details. You can follow us on Ichimoku Trading. Have a good week trading.